upward trends are fairly easy to trade. You see a market going up higher, it pulls back, it holds a level on the pullback, and that is your signal to enter. And then if it pulls back some more and holds, that could be either an entry or you could add to your trade. And then when you hit certain levels, exit. Pull back, hold, go in again, right? And so trading in an upward trend or in a downward trend is a fairly easy thing to do. When you find that you are loading up on a little bit too much allocation, let's say to the downside, you know you're going to get a bounce at some point. And if you're approaching an oversold condition, hourly, daily, where you think you might, or even the VIX is maybe a little overbought, and you're going to get a bounce, you could put on a hedge. And the best way to do that, if you're really leaning into the trade on a trend, okay, just keep in mind, this is trend trading we're talking about here. The best way to trade trend is to go out here short monthly. Like just go out to the monthly, June 16th, if that's what's going on, right? Once you've confirmed the trend, you can go out, 3-4 weeks. But your hedges should be short term, right? So you do little hedges here, for this Friday. If it expires, it was a little piece of insurance. If you get a little bit of a move, a little up, then you are able to take that money, and that helps reduce the cost as you add more shorts long term. Terrific. And if it reverses and goes this way, at least you had that hedge on, and that helps mitigate the damage. So trend trading is fairly easy in either direction. We do wait for confirmation. We could put our toe in the water and start initially with a pilot trade. We certainly have an allocation that we're going to use. We have an exit plan. So we know that, if I'm trading this to the upside, I come in here, and it starts to, if we come back here and take this level out to make a lower low, I'm probably going to exit there. Or I could use a 70%, mental stop. If I get down by 70%, I'm out. There are moments in time when we can add to the trade, and there are moments in time when we should hedge. And as I said, when we hedge, the best way to hedge is short term, and where your long positions, are maybe a little bit further out, maybe weeklies, monthlies, monthlies. And the same goes for the other direction. So that's trend trading. And if you we'll take a look at the SPY, and you'll see how the SPY was just going up, 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 and it did this, and it did this. It did this little triple top thing here, leading into April. And so we decided to short, and it did this. Now, initially, this is the uptrend. So initially, it's a pullback, just like these are, until the pullback gets some resistance, some support. You get a little bit of a bounce, which is expected, a little bounce on the way up, little bounce going on the way up. But those bounces fail. And as a result, you end up with a series of lower highs. Boom, boom, boom. So now and lower lows, boom, boom, boom. You've now created a downward structure where this upward trend is now in correction mode. You can't really call this a full-blown, downward trend. It's a correction. And so before you fully confirm that it's a correction, again, pilot positions. Watch your allocation. Don't go too far. And then as you start to confirm, as you break through these levels, then you can lean into the trade, right? You could lean in. And from that leaning in is when you probably want to start adding, some short term hedges. And we've been doing that. SQQQ puts, things like that during this correction. And so this is not as easy to trade as a trend, the correction phase, but it's fairly consistent because you've confirmed that it is not a pullback. It's no longer just a pullback. It is confirming as a correction. And so the corrections are easier to trade because you will eventually lean in, you will trade the bounces until what? Until a bounce gets a little bit, of an attitude and it no longer is a bounce. Yeah, there's no magic number, Taterhead. How many pullbacks do we need? It's typically when certain levels are broken. So if you have a significant, level that was created on the way up and these levels get taken out, that means there's no buyers in here to save the day. Buyers came in here and pushed it up, came in here and pushed it up. So if you break through that, that's confirmation. It's typically when levels are broken that the correction is on. So if you do this, then it chops, then it comes down, then you bounce, and you're like, well, where's it going to go from here? And then you take out this level. Well, you know what? That looks to me like the beginning of a correction. That's where I would say potentially confirm. Pilot position there, lean into the trade here. Or if you're conservative, you wait for the confirmation. Got it? So it doesn't have to necessarily be a certain number of peaks and valleys. And this is how we have been trading, actually, for quite a while. So that was up, triple top, came down, had a couple of bounces, a couple of semi-rebounds, but not really. But then you finally got rebounds. So the bounce can be pretty violent. But we look for levels of resistance that if it fails there, then, you can think about going back down this way. If you make higher highs and higher lows and you start taking out these levels, that bounce becomes a rebound. It's not an upward trend yet until you take out that high so that this continues. This becomes a huge higher high, then you're back in trend. But until you get back up to here, you're just rebounding. Now, here's where we are. The last few days, the rebound. So the rebound started, to move. What could be the time period used? It doesn't matter. You could use a weekly chart, a daily chart, hourly chart. The methodology is the same. Right now, what I'm referring to is, swing trading and looking at the markets from the perspective of the daily chart. So I'm going to show you the daily SPY chart to show you this. But methodology works on every chart. The rebound started to fail. So is the rebound over? Or is this just a what? A pullback. That's the condition that we're in right now. Is this a pullback of the rebound or is the rebound over? Or is this just, a little bit of a, give and take of the market before it screams higher and we're going to be back in trend? And so this moment in time is actually the hardest part of this cycle to trade. That's easy. Figuring that out, easy. Bounces, yep, you can tell what they are. When they turn into rebounds, you can tell what they are. But when rebounds start to pull back, lose momentum, then jet back up, and you're not sure whether it's going up or down, this is the hardest time to trade, which is why you don't see a ton of alerts out there right now from me, because there's too much uncertainty. Now, when I use the word uncertainty, I'm not talking about uncertainty in the overall market. I'm talking about uncertainty of direction, uncertainty of price action, because that's all I care about. Yes, there's uncertainty about the bond market. Yes, there's uncertainty about tariffs. Yes, there's uncertainty about a number of different geopolitical things that are going on. I'm not talking about that kind of uncertainty. The credit of the United States, the debt, the budget, all that stuff, CPI, PPI. Are we going to cut rates? What's the Fed going to do? I don't mean that uncertainty. I just mean straight up my best friend in the world, Mr. Price Action. Because price action is not very clear.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.